Hi everybody. Today I'm going to provide an update on my stocks and unit trust portfolios. Both portfolios have started since 1st of January 2022 and have been running for more than 2 years. I started the portfolio by slowly injecting capital into the portfolio. For example, for a stock portfolio, I have inject 4,000 every month in the portfolio. And currently, the portfolio have a capital of 115,000 inside. And the stock portfolio have been divided into 10 US stocks and 10 Singapore stocks during the initial phase. And the focus is on income and also growth. Now, let's look at the current portfolio holdings. Currently, there are 10 Singapore stocks, were comprised of 4 REITs and 6 stocks. And for the US portfolio, there's 1 REIT and 9 other equity stocks. The total return of the portfolio is slightly below 5%, which is actually not that great. One of the key reasons is the Singapore portfolio are currently in the negative territory, which mainly linked by the big drawdown from one of the REITs is called the Mapletree Pan Asia Commercial Trust, and one property counter called the CapitaLand Invest, followed by a aviation transport sector, which is SATS. And this have resulted in the portfolio giving a negative returns. For the US portfolio, the lagger are mainly Nike. We have a gap down recently after they announced our earnings, and also the REIT sector, which is not doing well in Singapore and US side, where the realty income is also currently giving a negative return. However, the other US stocks are giving a very positive return, and this resulted in a US portfolio giving a return of double digit, and thus the net return is about 5%. Since my last update, what are the changes that have been made to this portfolio? I did not sell any of the 20 stocks since last October. In fact, I add in more position to the current holding. For the Singapore side, I add in more to CapitaLand Invest, Mapletree Logistics Trust, and Parkway Life REITs. These are the 3 Singapore counters that increased my holding over the past 5 months. And for the US counter, I have increased my holding on Google, Nike, Johnson & Johnson, and Realty Income. For the Singapore location, currently, none of the counter hold more than 5%. The one with the biggest holding is Mapletree Logistics Trust. We have 4.93%. And the one that have the lowest holding is OCBC Bank, which have 1.17%. And why OCBC Bank have the lowest holding? As I'm trying to find opportunity to add into this counter, but however, the bank stocks are very strong during the past few months, and there's no opportunity for me to add more position to the bank counter. And the total Singapore holdings in the portfolio is 28.47%. For the US stocks, the total holding is 34.02% of the portfolio, and the one with the highest holding is Realty Income, which have 4.36%, followed by Google, we have 4.09%, and Nike 4.07%. None of the US counter have a holding of less than 2% at this juncture. Currently, I still have a cash balance of 37.52% for me to further deploy into the market. This is the stock portfolio performance chart since January 2022 against my capital invested. The blue line is my capital invested, while the orange line is the portfolio values. As you can see from the chart, the portfolio has started to steadily stay above the capital, which indirectly means that the profit has started to maintain and hopefully start to widen over time. Since October last year, this has resulted in about slightly less than 5% profit. And let's look at the dividend collected since the portfolio incepted. The dividend have been steadily increasing over time as more and more capital added in and more stocks purchased. As of now, the total dividend collected is slightly more than 1,800 Sing dollars. And going forward, I will going to make some changes to this portfolio. Is that initially I started with a income and growth focus as the capital is less. So now the capital have crossed 100,000, and I will still continue putting 4,000 every month. So I will want to increase the holding for the US stocks to about 15 stocks and the Singapore holding to 15 stocks. and the focus will more towards dividend income rather than on the growth side. And you'll see more changes to the portfolio in my future updates going forward, where more and more dividend stocks will be incorporated into the portfolio, mainly for income purposes. As I have started another portfolio that just purely focused on growth, and thus I would not want to mix up the two portfolios, and thus this portfolio will just purely focus on dividend income going forward. Let's look at my unit trust portfolio. The unit trust portfolio, in fact, have give a better return compared to the stocks portfolio. You have delivered a total return of slightly less than 9%. However, the capital invested is lesser also because of the money investment invest in it is lesser. And what are the changes that I make to this unit trust portfolio? Have I done a major rebalancing on this portfolio in Q1? Before I talk about what are the changes I make to this one, let's look at the portfolio performance since inception. So the portfolio have a bad start during the inception in 1st of January 2022 and is trying to play catch up. And finally, we can see that since November 2023, the portfolio have been turning more and more positive, and it start to pull away from the invested capital. And what are the changes that I made in Q1 to this portfolio is, first, I removed the China fund. As we know that China is not performing, and actually, in fact, the China fund have been pulling down the portfolio performance since inception until today. And thus, I make a decision to temporarily remove China fund. Although China may look low at this juncture, however, I'm not able to predict when China will start to rebound. So on the safer side, I have decided to just remove a pure China-focused fund, but I still maintain an Asia equity fund inside. And for the Asia equity fund itself, I have actually reduced the holding for FSA Dividend Advantage Fund. This fund was a very good fund, and in fact, one of the best fund for the Asia Pacific equity side, which had consistently beat the market. However, for 2023, this fund turned out to be one of the worst performing Asia Pacific equity funds. One of the key reasons is due to the holding they have on China exposure. Their China stocks have plunged quite a fair bit last year, and this resulted in them underperform the overall market. And thus, I decided to reduce the holding for FSA Dividend Advantage, and I add in another equity fund, which is called East Spring Asian Low Volatility Equity Funds. This is to counterbalance FSA Dividend Advantage. This fund is focusing on investing in Asia Pacific ex-Japan equity market, but they are focusing on stocks that have a lower volatilities. And however, to take note that this fund, the fund size is not very, very big. It's only about 166 million USD. And the fund was incorporated in 2016, which to me have more than 5 years of time horizon for me to monitor the fund performance. In the past, I didn't consider this fund, the performance was not really that great, as it mentioned that it's low volatility. And thus, this fund usually do not perform well when the market is on a bull run. However, when the volatility of the market start to move up, then this fund will able to perform. And in fact, this fund was one of the best performing Asia equity funds in the market, which actually delivered close to 20% returns for the whole 2023, compared to FSA Dividend Advantage, which delivered a negative double-digit return for 2023. And it also have outperformed the market by big margins for 2023 also. I decided to put in this fund first because it focused on lower volatility stocks, especially China market. Now the volatility is very high and the uncertainty is quite high at this juncture. And thus, I want to have some risk off on the aspect, but I still want to invest in Asia. So these are the top 10 holding for it. And you can see that the number one holding is Tata Consultation Service. It is actually an India company, followed by Malayan Bank is a Malaysia company. So you can see that top 3 holdings are not from China. Number 4 then from China is this Bank of China. And one thing I like about this one is I want to have China exposure, but I do not want to have so much China exposure. And this fund have a China allocation of 21.3%, which is one of the lowest among all the Asia equity funds. In general, a lot of them have more than 30% exposure to China. However, do think that this fund have a 17.3% exposure to Taiwan, which is a market by itself. And Taiwan market, in fact, was one of the best performance market in Asia Pacific. And this also explains why this fund delivers such a good performance for 2023. This is a fund performance since its inception, and I extract it out from the Eastspring website. You can see that the fund since launch, the performance is not really that fantastic. In fact, it have dipped below his initial NAV after it launched. After it started to climb up during the COVID bottom, actually it have dropped way below the NAV, more than 10% below the initial NAV. But however, after October 2022, the fund just keep on move up, especially October 2023. You can see that it have moved up so fast. Will this fund continue to have a great performance for 2024? I'm not sure. But however, I just want to take it as a portfolio management perspective that I have two Asia equity funds. One is focused on dividends and one is focused on low volatility stocks, especially when I feel that the Asian market is a bit volatile at this juncture. I may make switches to the portfolio along the way. And also some of you may have noticed that I have a cash equivalent holding there with about 15% where I put in Philip Money Market Fund. This was not there when I started a portfolio, as I started a portfolio with a very aggressive portfolio, which 100% of money will be invested in the equity market. And late last year, I started to introduce a bond fund, which is Pinko, inside the portfolio. However, now I further reduce the volatility of portfolio by adding in a money market fund, where currently the money market fund can yield a return of slightly more than 3% per year. And I also want to take this money market fund to put it there as an opportunity fund, where when there's opportunity, I can deploy this money into the market faster. So this is one of key major change. I changed the portfolio as the portfolio has started to grow in size. So I want to keep some cash in the portfolio for me to do some investment when there's opportunity arise. This is the tabulated portfolio allocation for my unit trust portfolio. Currently, you can see that there are two global equity funds, which both happen to be JP Morgan. One US focus, which is the Infinity US 500 stock index, and two Asia equity fund. One is the FSA Dividend Advantage, and one is the Eastspring Asia Low Volatility Fund. And one tactical fund, which is the Threadneedle Global Tech, and one bond fund, which is the Pinko GIS. And I have a 15% allocation to the money market fund. And the 3-year standard volatility for the portfolio is 11.57%. This is lower than the original allocation, which have a 3-year volatility of 15%. The 1-year annualized return is 16%. And you can see from the portfolio, FSA Dividend Advantage is the main lagger for the portfolio. We have dropped more than 10%. And 3-year annualized return is also down 10%. And this is one of the reasons why I decided to trim the holding for this fund. And I did not completely switch out the fund, as I feel that there is a potential for this fund to recover in 2024 and beyond due to its past good track record. And I will continue to do a monthly investment to all the 7 funds, and every month I inject $100 to the fund under the dollar cost averaging concept. On top of that, I got 15% of the money parked in the money market fund for me to deploy further into the market when there's opportunity arise. That's all I have to share with you on the updates for my stocks and unit trust portfolio. And do take note, this is not a recommendation to buy or sell any of the stocks or the unit trusts. If you feel that this has benefit you, do remember to like and share, and also leave your comment below to let me know what you think. I shall see you on my next video. Bye bye.